And in the week of 16 to 22nd of February, the total value of commodities traded on the AFEX Commodities Exchange was down by 49.37% to 2.41 billion naira. The number of contracts also declined by 53.21% to close at 130,000 in 85 deals. For more, here is Michael Martins, portfolio manager at AFEX Commodities Exchange. Hello, Michael. Thank you for joining us.
Hi, Ladi. Good morning.
Great to see you. First, take us through the weekly commodities trading and their drivers.
All right. Thank you very much. So over the course of the week, we saw a 49.37 decline in the total value of transactions executed on the exchange from around 4.76 billion to around 2.41 billion. The total number of contracts also fell in tandem by 53.21%. On the other hand, the total number of deals executed on the exchange went up by 46.55% from around 58 deals to 85 deals. The AFEX Commodities Index, which is the ACI, posted another positive week to the tune of 0.67%. And finally, we're seeing some movement in the AFEX Export Index, which is the AEI, finally posting a marginal positive week to the tune of 0.19%. With regards to the volume traded on the exchange over the course of the week, commodities like soybean, paddy rice, and sorghum were traded higher this week in comparison to the previous week. All other commodities like maize, ginger, and cocoa were traded less. With regards to price on the exchange for the week on the review, maize, the top gainers were maize and ginger, posting positive returns of 2.45 and 0.38% respectively. And the losers on the exchange over the course of the week were soybean and paddy rice, posting 1.01% and 1.56% respectively, and sorghum and sesame also losing 2.08% and 1.66% respectively over the course of the week. The only other asset under consideration for the week was the Fair Trade Exchange Traded Commodity, which is the FETC, which did brilliantly over the course of the week, posting a positive return of more than 8.12% over the course of the week. So that's essentially by and large what happened in the commodities market over the course of the week.
Michael, recent data from the NBS shows that Nigeria's GDP grew by 0.11% in real terms in the fourth quarter of 2020. Can you give any insight into the relationship between the GDP and the broader commodities market?
Yes, thank you. So if you look at the way the GDP is computed, right, and if you look at the sectors that largely contributed to the growth in the GDP, and there were two major sectors, the first of which is the information and communication sector, which I think grew by 15.9%. And secondly, and more importantly to this conversation, would be the agricultural sector, which grew by 3.42%. So that essentially indicates that there has been significant market activity in the agricultural sector, driving up the GDP and by extension to the commodities market. If we sort of combine that data with the conversation that we had last week with regards to the inflation numbers, I think my summation is that we should see more bullish action in the commodities market over the course of the entire season. We are poised to actually see more bullish action in the commodities market over the course of the entire season.
Yeah, aside for this week, we saw a slight positive return in the AFEX Export Index. Notice that the AI remained unchanged in the 2 previous weeks. Is there any reason why there isn't a lot of export market activity on the exchange?
So first, there are basically 2 different reasons why that is the case. So first of all, for most of the commodities covered under the AEI, which would be ginger and cocoa, they're not currently in season, and that would speak more to the cocoa market than to the ginger market. So if you look at the cocoa market, harvest usually starts around that late August, moving up to September, October, and then maybe to late November. So we're not currently ideally in the season where you'd see a lot of movement in the market. Secondly, is also that contracts on the exchange are sort of pegged to the international market, particularly the London cocoa futures price. And if you take a gander at the price chart for the London cocoa futures price, you would notice that there has been consolidation for the better part of 2 months, right? And what that essentially means is that the market is undecided as regards where it wants to go, whether or not that's up or down. So for most people who have taken, for major off-takers who have taken positions in the month of November, October, and all of that, I believe that they're currently gauging the market to see where the market direction is before they take any further positions in the market. So I believe those two fundamental reasons are why we are not seeing as much market activity in the AFEX export index in comparison to the other index on the exchange.
All right, thank you very much, Michael. In the meantime, last week we talked about the successful issuance of a 25 billion naira asset-backed commercial paper by AFEX. The commercial paper, which was listed in the fourth quarter of 2020, was 20% oversubscribed and was the first ever warehouse receipt-backed commercial paper listed on an exchange in Africa. I will still have Oluwafunto Olashemu, Market Development Manager at AFEX, with us here. I hope I did not murder your name. Good to see you.
Good to see you again.
Good
nice
morning.
being here. Good morning.
Yes.
And you look good, by the way.
Thank you very much. Well,
Great.
for a better understanding, talk to us about this ABCP. You know, what was the thinking behind this product?
Again, just as I mentioned last week, that the reason behind the product was to see how do we help agro-processors reduce the high cost of procurement of their raw material, and how do we ensure that we provide low source of funding to agro-processors to ensure that they can optimize their production capacity and then be more profitable.
All right, talking about financing the demand side with AFEX, ABCB. Last week, you did talk about the fact that the poultry and grains sector was one of the key sectors.
Yeah.
What about the supply side?
So on the demand side, it wasn't just the poultry sector that was financed. Actually, we financed also the rice millers and other sectors like the food and beverage sector. And if we look at the capacity that was, the capacity of these processors that were sponsored or they were financed, there was about 250,000 metric tons in capacity. And they all have an average of 18 years of operations.
Okay.
Yeah.
Now, talking about this supply side, is there a ripple effect on the economy?
Sure. So if we look at, Nigeria currently has about 66 million smallholder farmers. And these farmers are actually, and they are the supply side, and they make up about 80% of the local production of crop in Nigeria. But their standard of living, most of them live below the poverty line. And the reason for this is because they do not have access to markets, and they do not have guaranteed offtake of their produce. And because of that, they are basically forced to sell off their farm produce at whatever price, not even considering the cost of production, right? And what this then translates to is that they do not have enough funding, or they do not have enough capital to be able to procure quality input for subsequent planting seasons, right? Now, the way we begin to finance the demand side, what it then does is that as a licensed commodities exchange, it creates that access to market for the supply side. So there's a fair exchange of value for the farm producers, for the farm produce that the farmers cultivate and bring to the market. And then apart from that access to market and that fair value, because the farmer is now getting a fair value for what they produce, they are able to now afford input towards the next season. Ultimately, production in subsequent season increases. And there's also an incentive because, again, if I'm getting a guaranteed offtake for my farm produce at a better value, I am incentivized to go and produce more. And if we then combine all the activities of the demand side with the supply side, we would see that there will be increase in job creation, there will be increase in food supply, and then we can sufficiently feed ourselves. And ultimately, all of these activities would lead to economic growth in the country.
All right. What other products are in the pipeline for the demand side?
So on the demand side, we actually have a number of products. Again, just as I mentioned, in order to inflow or unlock funding for the demand side, you need to be very creative in product development and listing. A number of products are actually available. One of them is the inventory finance note. And the inventory finance note is actually it's a funding facility that is available for fertilizer blenders. Fertilizer is a core input in the agri value chain. right? And then ability to produce the fertilizer at low cost would ensure that the cost of input and production to the farmer is reduced. We also have the repurchase note. The repurchase note is actually for agri SMEs that are looking at short-term funding, not more than 120 days. And it basically follows the principle of asset buyback, in which the borrower is basically buying back the collateral at the end of the tenure. We also have what we call the trade finance note. The trade finance note is issued on the back of a forward contract. And the forward contract is a way or a method that processors use to hedge their pricing risk so that they are more profitable. Now, at the sign-off of the contract between the agro-processor and the supplier, the quality, the quantity, and the price of the commodity is agreed upfront. Now, on the back of that contract, we then issue a trade finance note that finances the aggregation of the commodity that is then delivered to the agro-processor at the agreed time in the future. And then, of course, for all of these other products that we mentioned, we have the Sharia compliant version of them, because we do understand that there are people that would, of the Islamic fold, that would want to invest within the commodities market, but actually have the framework on how they would invest within this market. So for all our trade finance notes, exactly, to accommodate the Islamic, and of course, towards the end of Q3 this year, we would be doing another round of about $100 million round of asset-backed commercial paper, because the market is increasing.
So AFEX Commodities target is to build a $50 billion tech-enabled commodities funding ecosystem.
Sure.
Yeah, so what are the plans you're putting in place to achieve this huge goal?
Yeah, so interesting goal, and we call it our big, airy, audacious goal, right? And again, I would like to say, and which I also did mention the last time I was here, that if you look at other developed commodities markets, you will see that these are mostly derivative markets as against physical commodities market. And the advantage of the derivative market is it allows them to trade several times in contract, in financial contract, over what is being produced physically. If you look at Africa, for instance, South African commodities market is the only derivative market. And sometimes in 2019, they traded 15 times in derivative contracts, more than the physical maize that was being produced. And that's a lot of huge capital flow into the market. And it also helps in the development of the market. So for us to achieve our $50 billion tech-enabled commodity ecosystem, we will be introducing and developing lots of derivative products that will be listed on the exchange to guarantee that flow of capital into our market. And apart from the development of derivative, we would also be introducing other commodity classes like metal, like energy into that ecosystem. And the other things we're also doing to ensure that we are able to achieve this $50 billion tech-enabled ecosystem is the fact that we're also doing collaboration with other exchanges. For instance, we have an MOU signed with the Dubai Gold Commodities Exchange to cross-list gold contracts on our platform. And much more importantly, I did mention the role of market policies, framework, and market advocacy. So we are doing lots of market drive to sensitize the market of the opportunities within the commodities ecosystem, and also doing lots of advocacy for implementation of policies, regulations, and knowledge.
Anyway. All right, thank you very much, Oluwafunto, for your time.
Thank you very much. Thank you for having me once again.
We do appreciate it.
Yeah.
All right, we'll take a moment.